The MACD indicator for MT4 provides easy-to-read buy and sell signals based on the very popular MACD indicator. A blue buy occurs when the fast EMA crosses the slow EMA from below. Similarly, a red sell occurs when the fast EMA crosses the slow EMA from above. Trading signals buy, a blue dot appears below the candlestick. Sell, a red dot appears above the candlestick. Use in conjunction with trend indicators, ADX, MAs, to trade in the direction of the overall trend. A forex indicator is a statistical tool that currency traders use to make judgments about the direction of a currency pair's price action. Forex indicators come in many types, including leading indicators, lagging indicators, confirming indicators, and so on. Popular forex indicators include moving averages, relative strength index, RSI, and average true range, ATR. A forex trader must choose the indicators that fit his or her trading strategy. With a MACD chart, you will usually see three numbers that are used for its settings. The first is the number of periods that are used to calculate the faster moving average. The second is the number of periods that are used in the slower moving average. And the third is the number of bars that are used to calculate the moving average of the difference between the faster and slower moving averages. For example, if you were to see 12, 26, 9 as the MACD parameters, which is usually the default setting for most charting software, this is how you would interpret it. The 12 represents a moving average of the previous 12 bars. The 26 represents a moving average of the previous 26 bars. The 9 represents a moving average of the difference between the two moving averages above. There is a common misconception when it comes to the lines of the MACD. There are two lines: the MACD line, the signal line. The two lines that are drawn are not moving averages of the price. The MACD line is the difference, or distance, between two moving averages. These two moving averages are usually exponential moving averages, EMAs. When looking at the indicator, the MACD line is considered the faster moving average. In our example above, the MACD line is the difference between the 12 and 26 period moving averages. The signal line is the moving average of the MACD line. When looking at the indicator, the signal line is considered the slower moving average. The slower moving average plots the average of the previous MACD line. Once again, from our example above, this would be a 9-period moving average. Most charts use a 9-period exponential moving average, EMA, by default. This means that we are taking the average of the last 9 periods of the faster MACD line and plotting it as our slower moving average. The purpose of the signal line is to smooth out the sensitivity of the MACD line. The histogram simply plots the difference between the MACD line and signal line. It is a graphical representation of the distance between the two lines. It may sometimes give you an early sign that a crossover is about to happen. If you look at our original chart, you can see that, as the two moving averages, MACD line and signal line, separate, the histogram gets bigger. This is called a MACD divergence because the faster moving average, MACD line, is diverging or moving away from the slower moving average, signal line. As the moving averages get closer to each other, the histogram gets smaller. This is called convergence because the faster moving average, MACD line, is converging or getting closer to the slower moving average, signal line. And that, my friend, is how you get the name, moving average convergence divergence. Phew, we need to crack our knuckles after that one. Okay, so now you know what MACD does. Now we'll show you what MACD can do for you. How to trade using MACD. Because there are two moving averages with different speeds, the faster one will obviously be quicker to react to price movement than the slower one. When a new trend occurs, the faster line, MACD line, will react first and eventually cross the slower line, signal line. When this crossover occurs, and the fast line starts to diverge or move away from the slower line, it often indicates that a new trend has formed. In Euro to US dollars 1-hour chart above, the fast line crossed above the slow line while the histogram disappeared. This suggested that the